Today. Today is a very important day. We're starting part 1 of how to trade SPY for a living. Today, I'm going to be opening up the curtains, showing you guys everything that I do, and really digging into it. I think that in the current world that we live in, there's a lot of opportunities for people to make extra money in the markets. There's a lot of opportunities to achieve financial freedom. And as part of my duties to give back to the community, I decided that I'm going to do this series. And I'm going to make sure that I go through as everything as I can in detail. That's why I'm splitting it into 5 sessions. All right. So first thing that we're going to do here is we're going to throw some people up on the screen for showing the support. I see that we have 166 people in here. This is amazing. We have a lot of giveaways, so please make sure you stay all the way to the end. I promise I won't waste your time. Let's go. So we have Todd from California. What's going on? Joe from VA. What's going on? Sherry from Chile, Minnesota. What's going on? Tom from Arizona. Jason from Pittsburgh. Chris from Denton. Art from Los Angeles. Alex from Broward County. What's going on? Tom from Clearwater. Todd from San Francisco. And let me throw one more up, and then we're going to get started. And we have Raju from London. What's going on, brother? All right. Great. All right. So first and foremost, guys, we have to start off with the basics today. At the end of every session, we're going to do a full trade recap of all of the trades that we took last week in the trading room so that you guys have real examples. We're not going to be using things from like 1950s and throwing it here up on the screen and telling you like, oh, this is a classical pattern, blah, blah, blah. We're going to be showing you real life examples, what we took last week. All right. So we have our brother right here with the first donation of the stream. Shravan right there with the $5 super sticker. How's it going? How's it going, brother? I appreciate you. All right. So the main things that you have to take away from this lesson, guys, is which instruments you're going to trade from SPY. So I just want you to be thinking about that in the back of your head. There's 3 major instruments to trade SPY. There's futures, there's options, and stocks. So those 3 things, I want you to be thinking for the rest of the stream, which one suits your constraints, which one suits your schedule, etc. So make sure you're thinking about that, and we're going to be taking a poll at the end to discuss that. So first of all, what is SPY? So the SPY is the S&P 500, right? The Standard & Poor 500. It's an index fund of 500 stocks. So it's the 500 top stocks in basically America, all right? So right here, what I have is I just have here the top 10 holdings for SPY: Apple, Microsoft, Amazon, Facebook, Google, Berkshire, Tesla, Nvidia, JP Morgan. So basically, guys, what the SPY is trying to achieve, it's giving you a small portion of each one of those stocks. So each one of these 500 stocks is a small little bit grouped up into a basket. So it's almost like a mutual fund, meaning that you're not concentrated risk into one particular stock. You have it spread out. So that leads me into the major benefit. So what's the major benefit of trading an index like the SPY? What's the major benefit? Well, diversification, right? So if Facebook has fraud, let's say, or if one of these big companies have fraud, their individual ticker might get hit 20, 30, 40%, but the S&P 500, because it's a basket of 500 stocks, won't take that big of a hit. So essentially what you're doing there is you're diversifying your risk through trading one instrument. All right. And that's very, very important. The other main benefit is the most liquid market, period. The S&P 500, when it comes to futures, when it comes to stocks, when it comes to options, is very liquid. You can get in and out. There's somebody willing to buy your shares, someone willing to sell you shares. So that liquidity is important because that leads into the spreads. Especially when we're trading options, we need spreads to be not wide. If the spread is too wide, sometimes we're just going to lose money because we're getting in and getting out at bad bid and asks. Okay, so the spread is tight, which really helps. The other major benefit of the SPY and just S&P 500 is the access to the futures market. So MES and ES, which I'm going to talk about right now, which give you overnight access. All right. So let's step right into futures off the bat. So the futures, the ticker symbols MES and ES. ES is the standard contract. MES is a fractal contract, meaning MES is 1/10 of a regular ES. So they just brought out MES not too long ago. Very powerful for people with small accounts. Very powerful. Okay. So the only downside to futures, you need margin. It's margin required because each contract costs a lot of money. So that's that double-edged sword. You can get margin called. When you're trading futures, it's no joke. You can make a lot of money. You can lose a lot of money. You must have a stop loss. You must understand your risk. All right. So if you know what you're doing, it's pretty safe. If you don't, you could be trapped. So let's look at futures right now. So here I have the futures chart, guys. Well, wait, this market is moving right now. This market is moving right now. So every Sunday at 6 p.m., guys, the futures markets open. Yes, and my brother right here, Otis, futures are also taxed at a lower rate. That's another major benefit. Futures have a specific tax rate in the tax code. So if you trade futures only, you actually get less tax on your income. All right. So here we go. So we're here on the futures chart. This is it, ES1. Okay, so this is the E-mini S&P 500 futures. So this is open right now, guys. You could be trading this right now. So this is one of the major benefits. If you don't want to trade regular trading hours, if you live in different parts of the world, futures is your go-to. If you want to hedge before the market opens, if you want to do whatever, right? Futures is there, basically open 24 hours. It closes on Friday, reopens on Sunday. Okay. So now let's talk about the money, right? Like how many people here want to talk about the money? Hit me with a 1 if you want to talk about the money real quick. Right? So let's talk about the money. So here, ES contracts, 1 point is equal to $50. Okay. So the MES contracts, 1 point is equal to $5. Okay. So in the past, guys, especially when I first started trading, MES didn't exist. So what would happen, guys, is if you took those ES contracts and you went the wrong direction and you lost, if you had a small account, you kind of blow up right away. Now with the introduction of the MES, guys, this is really key because anybody can trade. You can probably trade futures with as little as $1,000 to $2,000 with the MES contracts. All right. So now let's just discuss right off the bat here. Let me just hit the replay and let's look at the, oh, I guess I can't replay on the futures, but anyways, let's say we take this opening range breakout right here. All right. So here's the first 5-minute bar at 6. Okay. So the opening range breakout. So next session, we're going to talk detailed about the strategies, but let's just focus here for a second. So let's say we took the opening range breakout of the first 5-minute bar. So we're going to take the break above the high or the break below the low. So we can see it breaks above the high. So I'm going to use this measurement tool right now, and I'm just going to measure it to the highs. So this was about 20 points. Okay. So 20 points. So we made a move of about 20 points. From the actual lows of the open, we made a move about 47 points. So 20 points, guys, is going to be 20 points is going to equal to $1,000 on one contract. That's ES full. Okay. So that's a potential right there. So you could have already made a quick grand on this opening range breakout. So that's why futures are very powerful, because a lot of people are not able to trade during regular trading hours. So this gives the traders an opportunity to get involved. So now if we were doing MES, guys, we just divide it by 10. So 20 points is going to basically give us $100. All right. So there's something for everybody. Okay. There's something for everybody. All right. So that's futures. So just to recap, so futures, ticker symbol MES, ES. I'm going to show you some more examples later using live trading that we did last week. And I'm going to talk to you about the profitability, etc. Just remember, if you decide you want to trade futures, I actually did a separate course on futures for free on my YouTube. So check that out. But it is a margin account required, and margin always is a double-edged sword. Remember that. Okay. So let's move on to options now, then stocks, and then we're going to keep it rolling. Okay. So options. So the only type of option trading that I do, guys, is naked calls and puts. You can do options on futures. Okay. So if you use options on futures, then you're going to have the same 24-hour access. So there's options on MES and ES. So that's something that's available, but I use options on SPY. So the ETF. And I don't do anything advanced. I keep it very simple, naked calls and puts. So what that does allow for me, guys, is I have a fixed risk. This is very important. When you trade margin, if you don't have a stop loss, in theory, the broker could call your account and you can end up losing more than you put in. That's happened before in oil. Okay. It's very rare. That usually doesn't happen, but it can. If you do options, naked calls and puts, if they expire not in the money, you lose what you put in. So the biggest benefit to option trading is you can fix your risk. If you put in $500, and so I'm just talking about naked options, you put in $500 to calls, it expires out of the money, goes to zero, you lose your $500. And that's going to be very important, guys, especially when we're playing zero DTE option trading, some of the stuff we do in the room. If you're going to take aggressive trades, you need to know what you're going to lose upfront. Okay. So the downside is obviously the Greeks. There's a limited expiry on options. So you have to be in the money by a specific date. There's also implied volatility, data decay, all these factors. And sometimes that makes it a little bit complicated. But if you're trading options the right way, they're an amazing tool in order for you to get quick gains in and out, right? Then we have stock, right? Just straight up stock, right? So let's shout out our brother here, Jonathan. What's going on, brother? $4.99 Rich. Let's all kill it tomorrow. I'm excited about the picks. Wishing you green. Wishing you green too, brother. Thank you very much. So the stock is kind of like where the traditional investor will stand. So you can do margin or cash, right? If you do just cash and you buy the S&P 500, let's say you buy the SPY ETF, you can hold that in theory for forever, right? There's no expiry. There's no margin. So for my traditional investors, buying the SPY is also a very good strategy for a long-term investment, which we will talk about. If you're using it for trading purposes, it does require a lot of margin, which is a little bit of a downside. But as long as you are in and out and not bag holding anything, you should be fine. So now the question is, which one is right for you? So it depends on your constraints and your risk appetite. And I'm going to share a story to tell you guys my journey. All right. So I traded futures, options, and stocks. So with futures, I've taken $5,000 to $85,000, and I've also been margin called throughout my career. So I've been on both extremes of futures. And the time I got margin called was when I was trading without a stop loss. I basically lost $25,000 just straight. Okay. So that's my honest story. And then we had some amazing runs. You guys know 2019, 2020, some amazing runs where I've been able to have amazing gains using leverage. So futures also, guys, allows me, like right now, if I want to take a trade, I can do it. So futures will always be a part of my trading, always. The options and the stocks, I've been hitting those a lot with my day trades, especially the options, especially zero DTE, because you can get some amazing, amazing returns. So you need to know, guys, what are your constraints? Are you able to trade RTH, regular trading hours, or not? If you're not able to, then futures might be a better option for you. What's your risk appetite, guys? Are you looking for home runs? Are you looking for little gains? Are you looking for consistency? There's nothing wrong with any of those approaches. You just have to know which one you want to do, right? So personally, for me, I like being in a little bit of everything because that in itself is diversified, right? So for example, if I was long on futures over the weekend, guys, I'm already up like a good $1,000 or $2,000. Okay. We have a donation here, PC Trading. Hey, Rich, I'm wondering what makes you decide where to set your entry point for the calls and puts with the SPY play you posted 6 days ago. Can you explain? 472, 467. So, brother, I use Fibonacci for those entries as well as just looking at the chart on the 5-minute. So I have a variety of ways that I do it. It depends on the cycle as well in the market. So average true range, Fibonacci, those things I factor into play in order to come up with those. So it changes every few months. It changes depending on the cycle of the market, right? So I trade, guys, I use interactive brokers for people that are asking. Okay, so let's just take a step back for 1 second And let me ask you, do you understand everything that I spoke about so far? So hit me with a 2 if you did. All right. And guys, I could sit here and I can just preach to you about facts like, oh, S&P this, blah, 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 blah. I could do that, but all that information is already available. And what I want to really do is I want to spend time in the charts showing you the trades and showing you the potential, like the money. That's what we're here for, guys. Okay. I want to focus on that. So without further ado, let's step into the war zone. Okay. Let's get these charts out here and let me walk you through everything. All right. So as you guys know, I have a room for the S&P 500. We trade SPY every single day. So that goes through my Discord. All right. So let me just write down what we do on a daily basis. So this is my trading plan. I'm going to show you, and then you can adapt it accordingly to how aggressive you are, how available you are, etc. But the first thing that I do every single day, so I'm not going to spend too many time on strategies because I know we're going to talk about that next week, but let me just go ahead and show you the game plan. So every time we trade, we need at least 2 lines on the chart. I always have these: the previous day's high and the previous day's low. Okay, so somewhere down here. That is very, very important to me. So what I'm going to do here, guys, this is Monday of last week, and let's talk about some money scenarios. Let's talk about the P&L, etc. So the first bar of the day, so I'm debating if I should do a market replay and just do a replay if you guys like that. So let me ask you guys, would you prefer that I do a market replay and replay bar by bar? If you want me to replay bar by bar, hit me with a 1. If you like it this way where you could see everything, hit me with a 2. I'm okay with any one. So hit me with a 1 if you want to do a bar by bar replay. Hit me with a 2 if you just want to look at the final chart and then we just break it down. I see a lot of 1s. All right, so let's do this. So I'm going to hit the replay. All right, so this is Monday. All right, so the first thing that we do, guys, is I always ask ourselves, where are we opening? Okay, that's the first question. So where we're opening is very important, and it's going to determine the trading strategies that I use. So if we look at this right off the bat, guys, we're opening pretty much near the previous day's high, and we have a big gap up from the Friday. So right off the bat, guys, when I see this momentum, who do you think is going to be trapped? Well, in my view right here, guys, anyone that's shorted on Friday are going to be trapped right at the open, because you can see there was a big short going into the close. And now when the market gaps up like this on Monday, right, which was earlier this week, last week, now we have a bunch of trapped shorts. So the first thing that I do, guys, the first thing that I always do is I always play the opening range breakout when I know that I have trapped traders in my vicinity. Okay. So right off the bat, guys, this is exactly what we did. So let me also pull up ES so we can look at this together. All right. So if I go here to the 22nd, and let's find that 930 bar, which is right here. So the difference, okay, so now make sure you're taking some notes on this one. The difference between SPY and futures, the futures will always show the overnight action. So there's going to be, remember I said futures is open basically 24 hours a day. So futures is going to have overnight movement. Personally, for me, I always make my trading decisions based on SPY. Okay. But there are strategies to just trade futures pre-market levels as example. So this is the same bar. So this is the 930 bar. This is the 930 bar here. So let's talk about some money. Okay. So the first thing is right here. The first setup we have is an opening range breakout. So what is an opening range breakout? Opening range breakout, guys, is just taking the break out of the first 5-minute bar. So what I'm going to do in here, guys, is I'm going to come in here and I'm just going to set this right here at $500. Okay. So this is generally how much I risk per trade. Any trade that I take, I'm losing 500 bucks. So I already know that. If I'm wrong, I'm going to lose 500. If I win, I'm going to win anything between 700 to 1,000 plus. So my risk to reward is always in balance. Okay. So to take this trade with shares, you need to buy 1,388 shares, which is a lot. Okay. So you need margin to take this with shares. Let's go over the futures now. So now with futures, we do the same thing. We're going to bracket this 930 bar right there. This. Okay. And then I had my stop pretty much halfway through the bar with a fib. And what you can see here, guys, now this is saying quantity 2.222. So this is saying, guys, if you round down, you need to buy 2 contracts. Okay. 2 contracts. So I'm going to go here now and I'm going to hit the market replay. So boom, 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 boom. All right. So we had obviously a pretty big winner, right? And let me just go here. Let me just show you guys this quickly because I don't want anybody to think this is hindsight. That's not how I roll. All right. So let me get this here. I just want to show you guys that I call this out daily. It's very important to me to be transparent. I hate when, I hate hindsight traders. All right. So right here we go, guys. So this is the same day here. This is me calling out the orb, nice gap up, looking for orb, etc., drawing the candles, all that. All right. So just to show you guys. So here we go. So now let's just say here, guys, we have a target at 2. So double. Let's just say that. Okay. So if I have a target at double, when it hits this, so this is my first target, let's say, when it hits this target at 2, that means I made 1,000 bucks. Okay. So let me just continue now and hit the fast forward, boom, and go back to the auto here so we can look at it. So here is the trade. And let me just show you at highs where we were. So what I normally do is a scaling out approach, right? So I take it at like 1-to-1, 2-to-1, 3-to-1, etc. So at the very highs, we got about 5.9. So in theory, guys, obviously this is not the case, but let's just say you sold it exactly at 5. So which is here. So that would be 5 times whatever you risked. So in this case, 5 times 5, 2,500 bucks. So now let's go over to the futures market and look at that. So the same thing over here, guys. So stop loss was a bit tighter. So right around there. Okay. So in this case here, guys, you made 11.25 points. Okay. So let's just say 11 points. So if you bought 2 contracts times 11 times 50 bucks. Okay. So I'm going to have to whip out the calculator for that real quick. So 2 times 11 times 50. That's $1,100. All right. So there is different math behind the shares and behind the futures. And I want to be clear with that. Okay. So the difference is with futures, you see how we only had to buy about 2 or 3 contracts, whereas with the shares, we had to come with 1,388. That's a lot. So futures will always give you more margin bang for your buck. All right. So to trade these, let's say 3 contracts. Okay. Let me round up to 3 just in this case here. Let me round up. So let me get the calculator back out again, guys. 1 sec. 3 times 11 times 50. So 1,650. Okay. So I'm going to share with you guys a general rule that I have. So my general rule is this. For every 1 contract you trade, it's safe to have about 10K in your account. All right. Now, this is very important. So in theory, to take this trade on futures, I would need about $30,000. Okay. But if we go back to SPY, now let's calculate how much these shares are going to cost. So we had let's round down to $471 and let's hit 1,388. So this here, guys, roughly costs 650,000. So do you guys see now, right? There is a big difference between futures and shares in terms of the margin you have to put up, right? And that is very important. Very, very important. All right. So I know that one might be a little bit confusing for some, but hit me with a 4 if I still have you. Hit me with a 4 for the 4 horsemen if I still have you. So I'll talk more about this later on in subsequent videos, but I just really wanted to get you warmed up about everything. But I want to tell you guys the facts about you got to have money. Less money required with futures. Okay. And now let's say somebody with a small account. How do we deal with this with a small account? Well, if you have a small account, guys, then all you got to do is come on this and just hit the MES. Hit the MES, which is the micro, instead of the ES. So with the MES, guys, you're going to only be risking $5 per point. So you're going to make a lot less, but your risk is a lot less. So futures, especially micro contracts, are amazing. So what I would do for every one micro contract, I would have about $1,000 in my account. And that's how you can trade with a small account. Okay, guys? All right. So now let's go back here. Let me finish up this recap here. So we had the opening range breakout, right? So right after that, guys, we had an outside bar, which was a beautiful winner as well. Then we had this inside bar at the top of the range, which was a loser. And then this inside bar was a beautiful short, guys, that just had a home run. Okay. The last thing we had was a trigger. So the trigger is this the trigger was right around here, guys. The trigger came, filled us, and just stopped out. So what I'm looking for on a daily basis, opening range breakout when applicable. So again, I only use the opening range breakout when there are trap traders in the market. And I call this out on the Discord for people so they know that I'm looking at that. Okay. Then after the opening range breakout, I look at my inside and outside bars like we have here. And I always have a trigger, which is an automated trade. So let me just show you guys a trigger. So every day I post a trigger before the market opens. The trigger is basically an automated trade. So get in at this price, get out at this price. It's based on fibs and based on volume and different things. So the biggest thing you should take away from this, guys, is if you notice, guys, I really have 3 systems working here. And it's actually going to be 4. So what you'll learn about trading strategies, which I'm going to talk about in the next class in detail, what you're going to learn is this. We generally have on a good system about a 70% chance to win. So not all the systems are going to work on the same day. Okay. So what you're going to do is when you have a variety of systems that are stacked on top of each other, you're basically giving yourself the best advantage possible. So for example, if the opening range breakout doesn't work, well, I have my inside and outside bars. Well, if that doesn't work, I have my triggers. And if that doesn't work, I have my Fibonacci, which is a little bit more advanced, but I'm still going to talk about it here. All right. So what I'm going to do is I'm going to get rid of the markups here. I'm going to hit and I'm going to show you guys just to clean it up a little bit here. Okay. So to recap, so this was Monday. The first trade we took, opening range breakout, beautiful outside bar winner, inside bar failed. This one, beauty rip. Okay. So we also had this Nirvana in the middle of the day, which was great. This one down here didn't really work out, but that's okay. When we're taking inside and outside bar, guys, we're basically flipping a coin. We're flipping a coin, but we know if we hit it, we're going to hit big. So like if we hit, so for example, guys, if you hit the puts up here on this inside bar, you easily make double or triple your money. That's what we're thinking about. We're not trying to be accurate. We're trying to make money. Okay. And now the last thing that I'll show you is a concept on Fibonacci that I wrote about in my book, and it's advanced. So I don't expect you guys to like really get it right away, but we're going to take our time. And throughout this seminars, hopefully I can help you understand it. All right. So the last setup that we have here, guys, is something that I call the afternoon leg from my book on Fibonacci. So what this means, guys, is this usually comes in around lunchtime. Okay, so you could see right here, guys, this is 11.55. And what we have here, guys, is a clear high and a clear low. So when we have a clear high and a clear low, what we're going to do is we're going to take the Fibonacci from the high to the low like this, and we're going to leave it marked. And generally what happens in the afternoon, guys, the afternoon generally chops a little bit, and then it comes to some of these major fibs and it sets up patterns, right? So you can see right here, guys, when we came to the 618, we put in this beautiful pattern, outside bar into Nirvana. So the Trading Wars Nirvana pattern is the inside outside. So this pattern right here, guys, was very powerful. And this was a short into the end of the day. You can see this huge rollover here. I know the puts with 0 DTE went for 1,000% on those days. So that's what I mean about when we take these bars, we're looking for that risk to reward. All right. So that was Monday. And let's go on to Tuesday. So on Tuesday, guys, this is what happened. So let me just move my lines now. So now we have this low and this is the high. So we have a little bit of a gap down right off the bat. So what I did on this day, guys, was because I knew that the what I knew about the market was going to be a short week. What I decided to do was go to the 3-minute chart. So I trade the 5, the 3, and the 15. Those are my time frames of choice, and I'm always looking on each time frame to see if I can see a better story. So I went here to the 3-minute chart that day, guys. Let me get there, which was the 23rd, right here. Okay. So right off the bat, guys, what I did was this was the first 3-minute bar. So this is the 9:30. It closed. We took the opening range breakout again. You see, in this case, guys, this opening range breakout gives us a nice 1-to-1 push. So this was a great 1-to-1 push. But if we look at the 5-minute, guys, the 5-minute opening range breakout did not make any money. So those are the things that I'm always testing and getting better at is when do I use the 3? When do I use the 5? When do I use the 15? And whenever I'm in the room with the members, I'm always calling out which charts I'm looking at. And I just knew that because of the short week that I really want to focus on the 3-minute chart. Okay. So here was the opening range breakout. That's the first play. Then from there, we had this inside bar, which was a little bit of a fake out. Didn't really produce much. But then right after that, guys, we had beautiful, beautiful in sync bars. We had an outside bar, which was a huge short, an inside bar, another huge short, and another inside bar, another huge short. Okay. So that we just crushed it on the 3-minute chart that day. It was beautiful. And then let me go over here to draw you the fib. So again, what I'm going to be drawing is the afternoon leg, because the afternoon leg is probably the easiest for you guys to understand. So here we go again. This one came in a little bit earlier at around 11. We had a high and a low, and we started retracing. So if we take the Fibonacci again from the high to the low, guys, what you can see is, look at this right here. I want to zoom in on this, and I really want you guys to focus on this, because the one thing that I've learned about SPY over the years is that the S&P 500 is very, very methodical, in the sense that it's very algorithm driven. It's very Fibonacci based. And I'm going to show you guys that right now. So just looking at this high and the low, we can see that we pull back in here, guys, to the 50. You see this line, this 50? Let me move this line down. So the 50 is like the line in the sand. And you can see, guys, every time we come up on this 50 here, we reject. Boom, boom. In this case, guys, we put in a beautiful Holy Grail pattern, which is one of my patterns here. And then we even came back and tried it again with another Holy Grail. And this is how you can become an expert scalper using these fib lines. You're just taking these rejections, bam, taking it down, taking from fib to fib, fib to fib, fib to fib. All right. And that was beautiful, beautiful action into the close. And then eventually we broke out of the fibs and we just kind of pushed into the close. And when we broke out of the fibs, guys, we had a reverse fib. This is what I call the opposing leg. If I take it from this low to this high right here, you could see, let me just take it to the high right there. Boom. So another pullback to the 786. Bam. All right. With an inside bar as well. Beautiful. All right. Hit me with the 5 if I still have you there, guys. I'm only going to do one more because I don't want to overwhelm you. We're going to do one more. Okay. So I'm just trying to show you the real trades we take every single week, because, guys, it doesn't matter if I pull up a chart from 3 years ago and I start preaching about something. That doesn't mean anything, guys. The market is constantly changing. Your strategies have to be adapted to the current volatility, the situation in the market. All right. So here we go, guys. This is the Wednesday. The Thursday was the day the market was closed for Thanksgiving, and on Friday we had a half day. We did make some money on the Friday, but I'm not going to talk about it because generally I don't trade on the half days. It was more for fun. But here we go first. So this was the Thursday. So if you notice something very important, guys, this is a different type of open. If you can see, we're not gapping down or above the previous day's range. So what I do here, guys, is I stack a Fibonacci. So I'll take a Fibonacci from the low to the high like this. Okay. And what I do here, guys, like this is just beautiful. You can see right off the bat, guys, I got involved with this trade in the room because we were hitting the 786 and we're just bouncing, right? So right here, guys, we had a beautiful holy grail pattern. So on days like this, guys, I will not take the opening range breakout because we're in the range. So I'm expecting there to be some chop, okay? So we had this holy grail and we had this other inside bar here, guys. These went for huge winners. All right. So just to tell you guys, like when we have pushes like this, the call is easily going for 100%. I post the I post the percentage gain. I always post it on Twitter on a daily basis. I make a recap video so you guys can see. But I'm also keeping a log of all of the option plays with the percentage gains, and I'll be sharing that at some point with everyone. All right. But basically here, guys, so just knowing like that's a little bit of a teaser into next session is knowing where you're opening. Are we opening and threatening bears? Are we opening and threatening bulls? Or are we opening and everybody is neutral? When everyone is neutral and when someone is trapped, we have to do different trading strategies. Okay. All right. So beautiful. So those are a bunch of strategies, guys. Like I said, trigger trades are automated. They're posted the night before. In this room here, guys, I spend about an hour to 2 hours in the morning walking people through everything. Swing trades are automated as well. And then we have a members lounge for people to just talk and learn. So there we go, guys. That's day one in a nutshell. I think I covered everything. So what I want to do right now is let's do some giveaways. Let's talk about a few things. And right now, just hit me with a 7 if you're feeling good, if you understood that. We're going to be talking a lot more about trading strategies next week, but I just wanted to lay the foundations, and I want you guys to go ahead and start thinking about what you want to trade, futures, options, or stocks. For the Fibonacci settings, guys, just go to my website, tradingwars.com. Go to this one that says book Fibonacci and options. I have these are my retracement and my extensions right here, and you can manually add these to your Fibonacci tool. Okay, so great. All right, man, guys, this has been a real big hit for me. I've never had this much people in a long time, so I'm very grateful, and we're going to be doing some giveaways to show some love to everyone. Okay, so what we're going to do is the first thing before we do the giveaways, I just want to go through a few things. So I released the options drill down book in September. So this book, I released it in September, and it has been an amazing seller. It's on par with the Fibonacci book. And I'm just thinking about writing a SPY book because I don't know if there's interest, but because pretty much I'm going to share everything here for free, but I may talk a little bit more detail in the SPY book. So what I want to know right now, would you guys be interested in me writing a SPY book? Because if not, guys, it doesn't matter. I would just move on to something else because I have other things, other tasks that I'm working on, other projects. I just want to know. And you guys are my customers. You guys are my partners. You guys are my friends. I want to know. So hit me right now with a 9. Would you be interested in a SPY book? Hit me with a 9. And you guys know how I do. Anytime I give a book, anytime I offer a book, it will come with 1 month for free in the service because there's no point that I write a book without giving you the service. There doesn't make any sense. So if I write the book, we will have 1 month for free in the SPY room if you guys are interested. Okay. What I want to do next time also I'm going to be looking to review some of your trades. Okay. So I want to look at some of your trades and review some of your trades for SPYs specifically. So next time we come to class, bring some of your trades for SPYs. What I need is the entry time, the stop loss, the target, all the details for the trade, when you got in, when you got out, and I will look at it and review to help you guys. Okay. The last thing that I want to say, guys, is I decided to do this whole seminar for free. A lot of my colleagues in this industry and a lot of the people that I've looked up to in the past, I've bought their products, I've gone through their material, and I will say this, guys, that something like this that I'm doing, someone would charge you a few $1,000s for, and you guys already know that because you guys have been around for a while. So what I want in return, all right, I'm gonna be honest, I need something in return. I really want to get 500 likes and 100 comments on this video. That's all I'm asking for. In the last month, I've probably gotten about 3,000 or 4,000 subscribers on YouTube. YouTube is going to be my future because YouTube will help me to reach a larger audience than Twitter could ever have. And I just want to do that. I want to grow. I want to give more things for free. And in order to do that, I need to get viral somehow. So I would really appreciate, guys, let's try to get 500 likes on this video and 100 comments. What do you comment? This is what I want you to comment. Which one, where are you in this bucket? Are you in futures, options, or stocks? Okay, which one are you in those bucket? The other thing is just any questions that you have, feel free to comment. How do you pick the best strike price? Great question, brother. So let's going back to the Discord here. Anytime I post an automated trade, so this is our automated swing trades, this is our automated trigger trades. Anytime I post a automated trade, I will always post the option. So generally what we do, guys, is we're always looking for one strike out of the money from where you enter. Because when we're taking these trades, guys, what we're trying to do is we're trying to make sure that we're getting movement. So we always want to take one strike away from your entry. So keep it very, very simple. So, all right, I see you guys commenting in here, but what I want you to do is I want you to comment at the end. When I close the broadcast, you have to comment on the actual video, okay? So that's going to help the algorithm, all right? All right, so let's do some giveaways. And just again, I'm so grateful. And over 300 people. Thank you. God bless all of you guys. I appreciate you guys dearly. So what we're going to do is this. So the Tradingview giveaway, let's go to the Twitter. Pull that up. Oh, Data Warrior dropped his focus list, guys. That's cool. Where did we go? There we go. All right. So what I'm going to do here is you still have time to comment here, okay? So like, comment, retweet this post, subscribe to the YouTube channel. Make sure you leave a comment, okay? And what I'm going to do is I'm going to give you guys some more time. After I close this stream, I'm going to give it another 20 minutes or something, or 10 minutes. And then I'm going to randomly pick from here, okay? So one is for the 1 year of premium for Tradingview and then 1 year of Pro Plus. So one person for each. And then for my giveaway, so what I'll be doing is I'm going to give away a copy of my drill down book. Okay. And I'm going to give away, that is going to come with 1 month for free in any of the rooms. Okay. So how are we going to do this though? So this is what we're going to do. I'm going to pick a number right now between 0 and 500. And you guys are going to put all your numbers up on the screen until, okay, no, 0 to 500 is too much. Let's do 0 to 100. The first person to guess my number on the screen is going to get the free book and all that. Okay, so ready, set, go. So 0 to 100, pick a number, write it down. So the first person that gets that number is going to get it. Boom, right there. That was fast. So TKE Frodo, you won. Pretty good guess, brother. So what we're going to do here is DM me on Twitter. And what I need to see is I need to see a screenshot from your YouTube account that shows that that's your account. And then just DM me on Twitter and I'll send you the book. and I'll set you up with 1 month for free. Okay, brother? So thank you very much for that. I appreciate you guys. Well, now I have to find a way to remove this because I gotta find 1 second. I gotta remove this from the screen here. Oh, it goes away on its own. Anyways, all right, so that's good. All right, so there we goes, guys. Just to summarize, the major takeaway from today is SPY is very liquid. We have overnight access, diversification, tight spreads. The way we trade it, futures, options, and stocks, it depends on you, right? And you need to, by the next session that we come here, I want you to tell me which way you're leaning. Okay? By the next session we come here, I want you to tell me which way you're leaning, and then we can focus a little bit more on those. So class 2 is going to be next Sunday, same time at 8 o'clock. And we're going to be focusing deeply on trading strategies. So hit me with a 6 right now if you're excited for trading strategies, because I'm going to tell you, I am obsessed with trading strategies. I love trading strategies. I focus on them. I test them all the time, and I'm like obsessed. Really, it's like I feel like I'm a mad scientist sometimes. All right, beautiful. All right, so last thing I will say, guys, is if you want to trade this week with us in the SPY room, guys, you can. $39 a month. I'll tell you, by far, it's one of the best deals on the block. I know the people that are charging you $150 for delayed signals, but I'm not one of those guys. All right. So $39 a month if you want to check us out. If not, guys, it's fine. Just learn from this, build your strategies, and keep pushing forward. All right. So what we're going to do now is just a reminder. Let's try to get 500 likes and 100 comments on this video. I'm going to end the broadcast in a second. And when I end it, please, before you leave, just comment which one are you, futures, options, or stocks. Whatever questions you have, make sure you comment, okay? So we have a brother right here, Evan, with the $5. Thank you. Thank you very much. I appreciate you. All right, guys? And then there we are, guys. We are done. Thank you very much for day 1 of this seminar. It's going to be beautiful. I hope you learned a lot. It's been my pleasure being your teacher. I love doing this, and I hope to see you next class. All right. Thank you very much. Take care. Have a great